there's obviously a shortage globally anyway of silver. We know that from the Silver Institute's numbers. And I think what's happened is that the Chinese have now taken the view that they've got silver on board. They can no longer control the price because of what's happening to the dollar, because they're always looking at it from that point of view. Is the dollar going down? Yep. They can no longer take silver down with the dollar. So they're sitting on their stock just like that.
Waiting.
Yeah. I mean, there's nothing they can do. So right. This is a fascinating situation. It's causing huge, great problems in other markets, particularly the platinum market.
Right. And you've seen a huge spike up recently.
Yeah. Big backwardations. And the thing that's fascinating, there's a guy called David Jensen who's done some work on this, and I think someone else, a fellow called Davis, I think. What they've exposed is that China and America have been stockpiling platinum to the point where there's no liquidity left in London, in the London counterpart. So, you've now got it, if you like, a sort of, it's not quite like the nickel explosion on the LME.
I wanted to bring that up. Yeah, go ahead.
That was a slightly different thing. I mean, the nickel problem on the LME was one of incompatibility of delivery. The big short was someone in the nickel business in China, but they didn't have nickel in deliverable form, so they couldn't settle the contract.
Yeah.
So
I remember.
Minor technical error there, but upsetting everybody. But you can, this is. But I mean, the thing that's interesting, Andy, is in general terms, we know that the purchasing power of gold holds relatively true through long periods of time. Mm-hmm. So when you get a major deviation from price, in the gold price for something, let's say a basket of metals, base metals, then you know that the base metals being mispriced. Now that's exactly the situation we have now. Mm-hmm. Courtesy of the IMF, they produce a series of different commodity baskets, one of which is base metals. And it includes things like copper, antimony, nickel, lead, all the normal stuff. And I could work that back to the year 1900. Taking the 1900 value of this basket in gold as being our starting point. There has been some fluctuation over the years, but broadly speaking, it has held around about that sort of level. I mean, some obviously have gone up and some have gone down within the basket. I mean, that's why you have some sort of basket, as it were. The value of that basket today, measured in gold, is only 23% of what it was in 1900.
Wow.
In other words, either gold is too high or the basket is too low.
Yeah.
So,
there's an
argument. I mean, it is, we can see from the way monetary policy is and all the rest of it, that there is some justification that gold is ahead of the game compared with base metals. Fine, we can understand that. But if base metals are to normalize in gold, then we're going to see them go up by a multiple of 3 or 4 times in gold. And if gold is going to continue to rise in collapsing fiat currency, then the rise in these base metal values measured in dollars is going to be even greater. And it could happen quite quickly. So what we have got is a developing slump in economic activity. But at the same time, the commodities that you would think would suffer in that slump have either already discounted it completely or are so completely mispriced that they get a rise even in the middle of a slump.
Yeah.
So what's that going to do to everything? I mean, this is, I mean, we're coming to the end of the fiat currency system, which is now 54 years old. and there's so many
Mhm.
things that are going to go wrong. It's actually, I mean, it's, if you were on another planet observing what was going on, you'd find the whole thing somewhere between hilarious and very interesting.
I find it both. Um, so wow, so you just that was great, by the way. And I love how you frame it too. I absolutely agree with you. And to all my viewers and listeners, I think that's the way to frame it, that the fiat system is coming to an end. As opposed to thinking of it as a single fiat coming to an end. I think the fiat system is coming to an end. Um, this is anecdotal, but you brought up like you went to a conference years ago and how these companies were selling it directly, and I'm paraphrasing directly, more or less, is ending up in China. I have been to many conferences in the past 2 years. I've I probably talking to between anywhere from 200 to 400 mining companies in the past 2 years. And I posed the same question to a couple of these people. One of my questions is, okay, you're coming into production. Do you have a mill? Where are you shipping the metal, whether that's gold or silver, to be processed? Um, I probably posed that question to maybe 20 plus of these companies. And between 5 and 10 of them have told me, well, we don't need a mill. We're shipping it to China. That's what they
Interesting.
told me in the last 12 to 18 months or 24 months. That's exactly what they told me. Very interesting indeed.
Mm.
And you think you've already answered this question, but I just want to work it out a little bit more. I remember the nickel situation on the LME very, very clearly. And it seems like that could, again, potentially very well happen again, specifically not only in base metals, but with silver, because there's no supply, if you would. Yeah, work that out a little bit more for me. And it seems like that's your thoughts.
Yeah, I think so. I mean, it's sort of kind of confusing because you look at the silver stocks on COMEX and they're up at a record. It's all been sucked elsewhere. Because the other side of the story, and it's more true in gold than it is in silver, is that you've got stands for delivery, and we don't know what the hell's going on there. Who's taking delivery?
Mhm.
Um,
Yeah,
it's this stands for delivery isn't price sensitive or anything. I mean, it wasn't meant to happen, actually. I mean, the whole idea of a futures market is you use it as a hedging tool, not as something to take delivery. But,
right.
I think so far this year, something like 860 tons of gold has been delivered and about 8,300 tons of silver.
Wow.
These are very significant flows, and presumably the stock of silver sitting in COMEX is all waiting to be delivered, if you like. Some of it already committed, because obviously standing for delivery doesn't actually mean that you take delivery.
Yeah.
But for users of silver, I mean, what do you do? If you're an industrial user, do you sort of, just take it and store it in your warehouse or something? No, you don't. You leave it. You leave it in, the COMEX warehouses, which, where at least, it's secure and all the rest of it and insured. You don't want to take delivery until you actually want to use it. So I think a lot of that is just accumulating on that basis. Gold is
Mhm.
more interesting because I guess, and this is a guess, that it's some of the central banks, some of the sovereign wealth funds, and so on and so forth, trying to cover their position. I wonder also, and this is just a thought out of the blue, as to whether um, some central banks who have leased gold in the past and found that it's just disappeared into the market are trying to cover their position
Mhm.
because they don't want to be found out. I mean, if we're coming to the end of the fiat currency system, if you're worried about the future of the dollar, then obviously you've got to start worrying about how much gold you've actually got. Have you got it secured? And what happened to all that stuff you leased, which never really came back? You've probably still got an IOU floating around somewhere.
Right.
So what does this do to the liquidity in the gold market? I think that the liquidity in the gold market is gone because um, the whole of the forward LBMA forward dealing system, and also to an extent COMEX, really does depend on the availability of physical to oil the wheels of the paper market. And that has always come from leasing, and it's sort of, it's the Bank of International Settlements dealing and, taking gold from, say, the Bank of Portugal because it's got a collateral, then using it in the market, hypothecating it, rehypothecating it, and so on and so forth. Same with the Bank of England. Upon which point, wasn't it fascinating that back in March, the Bank of England reported that there was a 6-week queue to withdraw gold from its vaults. It couldn't handle the volume. Until that time, basically what a leasing central bank had been told was, oh, don't worry, that what will happen is that we'll just do a book entry so that possession of the gold over a period of the lease will move to X. Okay, so that's now, so in other words, it was a book entry transfer system within the vaulting arrangements. Okay, I'm happy with that. That's absolutely fine. But now, the people that we've leased this to are taking it out, and it's gone. Are we going to get it back? And so you can see how this informs central banks who have been storing gold, not just in London, but also in Paris, and also in the Bank of, the Federal Bank of New York. Mm-hmm. Where's our gold? We better get this under control. We don't want to do any more leasing. It's too uncertain. And furthermore, we need to repatriate it. I understand that Croatia, which is a pretty small player in this, has got sufficiently worried that it's getting all its gold back. I don't know where the hell it's storing it, probably under the central bank governor's bed. But this is a real problem. And of course, it does mean that the liquidity which drives the paper market has gone. Consequences yet to unfold.